Right now, it's time for a checkup on the supply chain and inflation in America. Joe Magliocco is the president of Michter's Distillery and its parent company, Chatham Imports. He's been bringing us updates for the last couple of years on the cost of inputs like corn for distilling and lumber and steel for building barrels and storehouses. And Joe, it's good to see you. How you doing?
Doing great. Thank you so much for having me on today.
Thanks for being here. What can you tell us about inflation in America at this point? How are things going?
Well, look, inflation, obviously the latest figures were about 7.1% as of November for the one-year CPI. And it's really affecting our industry too. With that, 7 to 8% labor increases are commonplace nowadays. And that certainly wouldn't have happened in the past few years. Inflation continues tremendously. Even though steel has come down a little bit, the steel that we use to build barrel houses, to do distillery expansions, steel is up about 63% over what it was pre-COVID. Even though it came down, it's still up 63%, which is quite a bit. It's a huge extra cost when we're building something. Our corn prices, corn is the biggest ingredient in bourbon. Bourbon is primarily made from corn. And corn is up 75% from pre-COVID levels. A lot of that has to do with the tragic war that's happening between Russia and Ukraine, because so much of the world's grain supply comes through them. So our glass is up close to 50% over last year and over 70% versus pre-COVID. Our rye prices are going up 60% next week all at once. So there still are a lot of tremendous inflationary pressures going on right now.
I was thinking of natural gas being mostly a European problem, but how much are natural gas prices up in Kentucky, and how does that affect you?
It affects us enormously. Obviously, when you distill, you have to use a lot of energy, whether you're making vodka, tequila, anything. And certainly for bourbon. And natural gas prices in Louisville are up 65% this year, and they're up 187% since pre-COVID levels. So that is just a tremendous difference in our energy costs.
So how much of your prices increased over that time? How much the price that you pass on to the customer?
It really has varied. I work between Michter's distillery in Kentucky and Chatham, a company that sells, vodka and gin and a bunch of different things, mezcal. It really depends on the product, but typically we've been raising prices at least twice a year. We have to, and that is not uncommon in the industry now. The good news is that, good brands have been able to take price quite successfully.
So you don't get pushback. How much of those increases been on average, and you don't have any pushback from customers at this point?
No, we really haven't. We rather than do one 10% increase all at once, we'll do 2 5s. For example, to sort of ease things in. That's sort of why we've been doing twice a year. So that's sort of been our methodology.
Hey, Joe, I'm wondering if there is a light at the end of the tunnel in that when inflation comes down, those price increases stick. You keep the price increases, don't you? I mean, isn't that what's good for your business, at least?
Yeah, no, certainly. Prices for things generally don't come down very much. But again, there are other, countervailing factors here. We're in a period when people are tight for money. And with inflation, running at 7%, people are trading down. Drizzly, the online alcohol platform, delivery platform, did a recent survey, and about 47% of retailers reported a trade down in the cost of things that people were buying. And that was in September, and we've seen that accelerate through the holiday season from what I've heard anecdotally from our distributors and from our importers. So there's a trade down now. The other thing that's interesting, too, is that, we've gone through periods like the dot-com crash and the Great Recession. And we typically see a lot of patterns that are sort of typical when people are tight for money. They spend less money in restaurants. They trade down in brands. And they consume more at home. Now there was a very surprising to me MasterCard report this week that restaurant spending was up 15.1%. But if you really look behind that report, I don't think that it's as rosy as that might indicate for alcohol sales here. The National Restaurant Association said that actually versus pre-COVID levels, 16% fewer people are dining inside the restaurant. So while fast food is strong and delivery is strong and drive-through is strong, people eating inside the restaurant where they can consume alcohol there is not really very strong. The other thing, too, is the National Restaurant Association recently did a study, and if you actually adjust for menu price increases, the spending at restaurants is actually up about 2.7%.